What's up YouTube, it's Louis here, I hope you're all well. We're taking a look at Quant again on the daily time, actually the weekly time frame first, and then we'll go to the daily. But looking at the weekly time frame, if you do remember back in July the 11th, or the close of that week, so the 18th of July, I told you guys Quant is now at weekly resistance. Don't expect anything to happen now. We did have one more target up, 130 to 150. We met 130. We didn't get all the way up to 150, but we did meet the initial 130 where I did say, guys, okay, even though 150 is the target beyond 130 is still an area to take profit. So well done if you did. We're coming back down. I did leave you guys off with a level that we do not want to hold. Do not want to lose, sorry. But yeah, I wanted to show you the weekly just to show you that, yeah, we ran into resistance on the 18th of July. Basically since then have done nothing, just ranging between the EMAs. Can you see trapped between these and these? You're trying to go below, you're getting pushed back over. Trying to go above, you're getting pushed back under. Trying to go under, let's get pushed back up. But yeah, we are of course prepared. We have always been prepared for these bearish scenarios, because back over here we said that this could potentially be an M pattern that if you fell would come back down to the previous W pattern's neckline, which hasn't been held as support. So I really don't like that, because whenever I see supports not being back tested, sorry, it was never back tested as support, whenever I see this in the future, usually fall through it. This is something I've said on the channel many months ago, that if you don't confirm a support, there's much greater risk when you do come to it eventually, because you start finding supports higher and higher and higher over here. Once you eventually lose the final one, because this was never confirmed as support, it's highly likely you fall through it and come back down to this. It's the psychological support. Let's hope that none of this has to happen, but we must be aware that it can easily happen, okay? Because the main reason is because it was never back tested. It does not have to, but I've seen it many times in the past, and you can go over in the last 1.5 years since 2021. You'll be able to see many examples of where we broke above a support and never came back, or broke above a resistance and never held it as support, sorry. So yeah, even though we went up higher than this potential double top, because this is your neckline, you have gone higher, does not matter. This is still an M pattern, okay? Potential, because it's only an M pattern once you lose this neckline. $88. So I had someone in the Discord group chat who's done the course say, Louis, we closed below 95. Does this signal we're going down now? So what it basically means, if I get the Fibonacci's that we did have on previously from the high to the low, why am I using these fibs? Why not this over here? So I'm using this impulse because we retraced into this golden pocket, and what's meant to happen is this continuation down. That's why we had this target ready, guys. So this is actually what should have happened and not what did happen. When we were meant to hold the golden pocket as resistance, you never did well. Actually, we zoom in here, you can see we have a wick over here. It was holding the golden pocket as resistance, but right there, that's when the bears should have stepped in, because you have the wick rejection, just like this wick rejection downwards. You had a massive one upwards, so this one going downwards meaning it should go up, this one upwards meaning it should go down, and did it? No. So you had multiple reasons. The 200 EMA, big resistance. The golden pocket, big resistance. The massive wick signaling this is resistance, this is going to go down. This here is lower than these highs, so that's a lower high. There's 4 reasons off the top of my head. There's going to be more, but off the top of my head there's 4 reasons why from this candle over here we should actually make lower lows. And did you do that? No. So while the bears were in power, they did not have enough power to push you down, and the bulls were like, no, screw the bears, I'm here. The bulls are here. Confirm its support, reversal wave created, minimal target, the 1.272, obviously aiming for the 1618, knowing we can just stop at the 1.272. I always tell you guys this, always, with the Fibonacci's. So well done if you were aware of that. But again, what do we need to do to go forward to see 150, to see higher targets than 150? Continuously hold $95. Can you see $95 over here, the golden pocket? Now I'm going to play some new fibs. So these fibs that I'm using are giving us the targets. We know the targets, so let's get rid of them now. I'm going to play some new fibs to show me this is where Quant, while dipping down here, this is where Quant should find support. This is what these fibs are being used for. The other one as a reversal wave, because we broke above the golden pocket, which remember we should have gone down but we didn't. We went up, so it created the reversal wave, giving us bullish targets. But now what I'm going to use the fibs for is not as a reversal wave. I'm going to use it as a retracement tool to find where is this retracement landing. So from the low to the high, you can see the retracement landed at 95. Strange, because 95 on the old fibs was also the gold pocket. It's the same here. It's the same level as well. Do not lose $95. As long as you're above it, we should anticipate we're going up in the short term. We should go up in the short term as long as we're above 95. But lose 95 as we did here basically means we're coming for this low. We're going to try and break this low. We know there's a support here at 88, the neckline of this M pattern. And of course, if we're closing below that, you validate the M to this target. So of course, you're going to go and try and take this out. But again, this is another support. There's so many supports. Even though once you break below this, you validate this target, you could find support on $77 and bring you back above this purple line and invalidate that. But don't hold on for that. I'm just telling you, these are examples. Anything can happen at any moment. So always be prepared. Why not prepare yourself? Like what you should think if you lose this support here, yes, we're going to this target. Nothing is gonna really like, now that we've lost this support, the only thing that's going to give me confidence it's not going down there is if once you lose it, let's say we did something like this, once you lose, okay, now we're here, you're below the neckline, so that means we should go to this target. So what happens if you get back above the purple line like that and hold its support? That means you're no longer going down there. But if you fall back under it, you're going down there. Get back above it, you're no longer going down there. Go back under that purple line, you are going down there basically. So trading is all about invalidations, validations. Once you get that around your head, things will get a lot clearer. And this is why we rather prepare for all the scenario, like both scenarios, up and down, because of all these fake outs. You know, you're waiting for this, you come down, validating it, you come back above, invalidating it, you're still waiting for it. But because you don't know the rules of trading, like the invalidation points, like they're holding that as support, means you're no longer going down there, if you understand. So this is sort of what we're seeing on Bitcoin right now. Go check today's Bitcoin update. It's so key. It's more important than this Quant update, to be honest, guys, because Bitcoin decides what the market does. What the whole of the market will do. But again, we need to hold 88 to stop this M pattern from validating. We need to hold 95 if you want to see short-term upside. So reclaiming it now, we need to continuously hold it with the daily candle closes. We want to see these EMAs breached, so we want to see get above $105, and that's what we need to do to come back to 130. If not, you can see we have our bearish targets all prepared over here. 1.272 as your bare minimum, 1618 as what we should be keeping our eyes on. But again, we can just stop at the 1.272, and none of this has to happen whatsoever. Again, if you're not losing this and you're not losing that, as long as you're above this area of 77 to 87, as long as you're above 77 to 87, you're not going to see downside at all. If you're losing 95, you could be coming into 87, 77, but as long as you're above 77, you're not going to see downside, basically. Something like that. Thank you guys so much. Please like, subscribe, and comment, and I'll catch you in the next one. Peace.